Hi everyone, welcome to another video by Optionables. My name is Saket, and today in this video we are going to discuss what happened to the markets on Friday and what is the outlook for the market in the upcoming week. So before I move on, there is also one more important thing which I would like to tell you. That is, there is something really exciting coming up on 30th of May. So this is something which I had already mentioned in the previous video as well. You can go to Optionables Twitter handle and start commenting or guessing what it might be. So 30 more days to go, and I'm pretty sure that it would be useful to all of you and all of you would really like it. You can also start guessing in the comment section of YouTube. So first we'll start off by looking at what exactly happened on Friday. So the Friday price action was very weird in the market because we saw that the market actually opened higher with a gap up. And during the initial session itself, around 10:30, we saw a huge sell-off come in, and then we saw a complete recovery in the market. And again around 2 o'clock we saw a huge sell-off, and from 2 to 3 o'clock the market gradually recovered. So especially after 3 o'clock we saw a crash which we had never witnessed in some time in past. So during COVID we had seen such crashes, but in 5 minutes the market ended up crashing close to 120 points, and overall just in matter of 15 minutes the market was down 200 points. And this move was really surprising because nobody really expected such a flash crash happening in just 10 to 15 minutes. And the only possible explanation for this would be a huge sell-off by FIIs, because DIIs, if you actually look at the FII DII data, DIIs were net buyers for close to 3,000 crores and FIIs were net sellers for close to 3,000 crores. It is pretty unlikely that retailers would start selling at such a huge volume immediately after 3 o'clock. So the possible explanation what we can see here is that FIIs might have triggered the sell button around 3 o'clock where the shares just came sliding down. So the thing is, this entirely changed the sentiment in the market towards the end. So we'll be discussing more about that as we look at the screen recordings. We'll be doing some analysis with regards to open interest and charts by looking at the screen, but we will also first discuss the market outlook and what exactly happened to the markets before we move on to that. So after this, we also saw the same was followed by US as well. So US hardly opened around 0.5% to 1% down, but the sell-off continued throughout the day. They closed almost at the lowest point of the day where Nasdaq was down by 4.5%, and even Dow Jones and S&P were almost down close to 3%. So this is a huge move considering that they had rallied 3%, Nasdaq had rallied 3% on Thursday and yesterday it fell 4%. That means clearly at higher levels there is a lot of selling coming in especially US stocks. And the reason is quite obvious. So right now the risk to reward in stocks is quite less, and as the bond yields start to go up, bonds become more attractive compared to stocks. So if you actually look at the US GDP, so US GDP hasn't done much in past 3 years, but the stock market has just doubled due to the excess liquidity. Now as the liquidity starts to shrink, people will start to pull out their money. So they would want to go for something more safer than something more riskier. And that's the reason we are seeing that the bond yields are going up and people are shifting towards bonds and they are selling off their stocks. So right now our assumption is, if you actually look at the global markets as a whole, all the global markets are almost at the year low. So whether you take it Europe or whether you take it US or any market in Asia, for example, you can take Japan or China. So everything is almost trading at a year low. But if you look at India, it is still up by close to 15 to 16%, mainly because it has been supported heavily by DIIs. So why exactly are DIIs supporting? The thing is, there is huge influx of money into mutual fund, which is helping DIIs pump in a lot of cash into the market. But one thing what we have to keep note of here is, if the markets are not performing, then the inflow is obviously going to get lesser. So that is one thing what you have to keep in mind. And second thing, the possible reason is LIC also comes under DII. So since LIC IPO is coming up, the domestic institutions might be trying to keep the market sentiment upbeat. So that is also one more reason why exactly the markets might be holding even though there is global sell-off happening. So these are the only two reasons which we can right now look at. So if you actually look at the data, FIS this year alone, 2022, we are just hardly 4 months into the year, and FIS have sold 1.7 lakh crore, and this is unprecedented. When I say this, if you actually look at the data from 2008, so 2008 was the year where they sold the highest, close to 1.1 lakh crore, and after that, so there has been no year where they have sold with such aggressiveness. So right now, this year, just hardly 4 months into the year, they have already sold the shares worth of 1.7 lakh crore. And also on the other hand, DIIs have purchased close to 1.4 lakh crores, and even this is unprecedented. Never before in the history, any year DIIs have actually ended up buying for 1.4 lakh crore, and we are just 4 months into the year and we don't know what the entire year holds for us. So that's the reason right now the sentiments obviously don't look that great. There is sell-off everywhere in global equities, and interest rates are also slowly going up, which is again bad for global equities. And it was more or less obvious it had to come because the Nifty valuation had gone off the roof. So the P ratio was close to 24 or 25 when the average P of Nifty is just around 18. So because of this sell-off and also the earnings season going fairly well, the P ratio of Nifty is almost trying to catch up to the average. So right now it's around 21 if I'm not wrong, but we are still off around 10% or 15% above average. So we either need the earnings of the Indian businesses to go up or the price of Indian equities to come down to come back to average. So it has been quite some time since we are trading well above average. From 2020, the P ratio of Nifty has been well above average. So now that will bring us on to the next question, what exactly we can expect from the markets for the coming week. So this will be discussing or doing the data analysis by using charts as well as open interest, and I'll be showing the screen recording for the same. So with that, we'll be quickly moving on to the screen recording part. Before that, if you are liking the content on this channel, do not forget to hit the like button, share this video as well as subscribe to Optionables, and you can also comment what are your thoughts on Nifty and where you are expecting Nifty to head, and also you can try to comment what the exciting thing might be that we are coming out on 30th of May. Thank you so much for joining, guys. Hi everyone, welcome to the video. So in this video, we'll be discussing about Nifty as well as Bank Nifty outlook for next week. First, we'll start by analyzing the open interest, and then we'll be moving towards charts. So as we look at the open interest here, yesterday, one thing that is quite visible evidently is the total call change compared to put change. So we can see that at higher levels, especially around 17,500, 17,000 and 17,300, there is a lot of call writing. So the total call change is close to 40 million. So as the market started to slide, we can see that people have aggressively sold call options. And just to see when did the selling of call options actually come, we can open multi-strike OI, as this will give us a much better picture. So right over here, you can see that I have put 17,200 calls as well as puts. So we are looking at mainly 17,200 and 300 because that is where most of the action was yesterday up until 3 o'clock. So Nifty was trading between 17,200 and 300, and that's the reason we are tracking what exactly happened during this time frame. So when we actually look at 5 minutes, you can see, especially during the last 30 minutes, starting from 3 o'clock, so this is 3 o'clock, there is a huge addition of 17,200 calls and huge decrease in 17,200 puts. So we saw that people, whoever had shorted puts, started closing, and people started writing more of 17,200 calls. So it is not just with 17,200, but even when you actually look at 17,300, we got to see something similar. There was a huge decrease in 17,300 puts right from around 2 o'clock itself. So we can see just around 2 o'clock, we saw some increase in call writing in 17,300 and decrease in put writing. So at this point, it was more or less equal. So you can see that both had 4.6 million and 4.5 million. But afterwards, within a span of half an hour, there was quite a lot of put options which were closed. So it was pretty evident that most of this open interest change came towards the end of the day itself, especially after 3 o'clock. So one thing that is quite evident here is there are a lot of short straddles which are actually being created at 17,100. So not just in intraday basis, but when you also look at the overall open interest, there are a lot of short straddle at 17,100. And it doesn't come as a surprise that even this move is quite clearly happened at the last 30 minutes itself. So here I have opened 17,100 calls as well as puts open interest. So you can see that after 3 o'clock, how the open interest has surged for the calls. It was somewhere around 5 lakh and within few minutes, it jumps all the way to 35 lakh. And same case with put, it was somewhere around 30 lakh and it suddenly jumps to around 45 lakh. So within the last half an hour, especially in calls, we saw some huge writing coming in, and that does suggest if people are so aggressively writing call option, that means they are expecting limited upside in the market. So that is one thing which we can clearly conclude. We can see that there are 70 million calls compared to 48 million puts, and clearly the trend is bearish because as we move towards higher level, there is some strong call writing as well. But we shouldn't also forget the fact that 16,800 and 17,000 has been a very strong support for Nifty, not just once but multiple times in the past. 17,000 and 16,800 has been a very good support, and the market has respected this support and it has bounced back from there. When we look at the overall Nifty chart, we can quite clearly see that the market is more or less consolidating in a very broad range. So this is more or less from 13th of May. If you look at it, market is consolidating in the range of 16,800 all the way to 17,400. So this is a broader range in which the market is trading. So even if Nifty tomorrow comes down, we can expect Nifty to take some support at 16,800, or if Nifty actually bounces back, we can expect some sell-off to happen as it approaches 17,500. The range now is quite broad and market is consolidating in this particular range. But the thing is, Bank Nifty tells a completely different story when you look on the charts. So in Bank Nifty hourly chart, we can see a clear downtrend happening from 38,500 on an hourly chart specifically. So we see that there's a clear downtrend which is happening in Bank Nifty. When I actually zoom out a little and when we look at the chart, hourly chart of Bank Nifty, we do see that 35,500 has acted as a very good support for Bank Nifty, and on the upside, market has found resistance couple of times around 37,000. So again, my view more or less remains the same for Bank Nifty. That is between 37,000 all the way to 35,500. So this is the broader range what I have for Bank Nifty. But one thing that has to be kept in mind is that I am slightly bearish because of the global trends. So both Nifty and Bank Nifty, in case if they fail to get any support at the crucial support levels of 16,800 or 35,500, then we can expect some further sell-off to come in. Right now, market is stabilizing because of positive retail sentiment and DIIs buying. But how long is it going to continue? That is something time should tell. But as the market starts to fall, slowly even retail people will start selling their shares, because whatever investments they are holding for maybe 1.5 years would have yielded almost zero returns, and as the market starts to crash, even they will start selling their equity shares. So that's the reason these levels are considered to be very crucial for the market to find its support, and if it fails, we can expect some further sell-off. So let's do a quick open interest check on Bank Nifty. So let me just open Bank Nifty weekly. So again here, it is more or less evident that there was huge amount of call writing compared to put, and the sentiment was clearly bearish. And one thing what we can see is, especially at 37,000, 36,500, at higher levels, there was huge amount of activity which took place in open interest or strikes. But as we move towards 35,500 or 36,000, you can see that there is not much of activity which has actually taken place. So if we look at the overall open interest, it's again quite evident that it is more or less bearish because of the total number of calls written. and total number of calls is clearly outweighing the total number of puts, and the sentiment remains to be bearish. But we do also see some good support coming in at 35,500 as I mentioned, and some strong resistance at 37,000. While we do this analysis, it is also important for us to keep in mind that you can see that the market is gapping up and gapping down every alternative days. So tomorrow there might be a gap down, and day after tomorrow you see some 80-100 point gap up. So this has been repeating for almost around 2 to 3 weeks now. So even if we open Nifty daily chart, so every day you see a gap up or a gap down happening, especially right over starting right over here. So here was a gap down, then here there was a gap up, again a gap down, again a gap up, again a gap down, gap down, gap up. On the chart it might look little small, but when you actually go into it, you see that these gap up or gap down is not small. So it is almost in the range of 100 to 120 points on an average. So that is pretty huge, and that's the reason tomorrow if we see a huge gap up, immediately we will see some put options being written at lower levels because people have sold so much amount of call options. So open interest keeps on changing dynamically. So tomorrow if there's a gap up, immediately at 16,800, 17,000 people will start writing put options because they have already sold so many call options. So that keeps happening. So that's the reason it is important for us to track open interest dynamically or time to time. So if we are looking from one end of the day to other end of the day, so then the chances are that we might have missed the changes in sentiment which happens during the day, and that's where Sensibull actually helps us with multi-strike OI to track these things. So this is more or less the analysis what we have for the upcoming week. And coming to what happened to our trade on Friday, that is something I missed to tell. And we ended the overall day with a small loss of around 80 to 90,000. So comparatively, if you actually see the last week, it has been quite terrible for all systems. But yesterday we ended with a very small loss. But that is fine. We also have a 36,000 short straddle which has been carried for next week. And along with that, we also have 1,000 quantity of Nifty future short. So these two are the trades which we are carrying for next week, and let's see how it goes, and let's also hope for the best. With this, we also come to the end of this video. If you have liked it, do not forget to hit the like button, share this video, and subscribe to Optionables. Thank you so much.